So if you take out your typical home insurance policy, what things do you want to make sure you have in your policy? So the first off is you want to make sure you have the highest deductible possible. And this really is where your agent requires, because for some people that may be 10,000, for some people that may be 100,000. But what's important to note is most of the high net worth carriers, so think Chubb, think Pure, think Cincinnati, think AIG, they'll waive your deductible if your loss is over 50K. So, and what are they trying to do with that? They're trying to encourage you to self-insure little claims and then save your insurance for the big claims, which is absolutely something that we recommend for people. So with that in mind, you want to look at, okay, how much does my insurance cost? And then where is the sweet spot? Is it, 5K if it's a kind of a smaller home? More likely than not, 10K would be the most common deductible you see our clients have. But certainly we have clients that have 25K or 50K or even 100K deductibles, depending on the cost of insuring the home and then the size of the home will all play into that matrix. But you for sure want to set that deductible as high as possible. Lots of times we'll see people with like $1,000 deductibles on their, these expensive homes, and it just makes no sense at all.
Okay.
Second thing you want to do is a lot of people have friends that are contractors. Just reach out to one of them and say, hey, you've been in my house. What do you think roughly the cost per square foot to rebuild my house is? They'll take a good contractor all of 30 seconds to give you that number. You multiply that times the square footage of your home, and then you'll know, okay, is my insurance adequate to replace my home if I have had to do that? Unfortunately, like when you see these big events go through, think wildfires, tornadoes, it's the wrong time to find out that you don't have enough insurance when you start getting bids on those homes to replace it. So that's something you can easily do. It's a 30-second conversation with a friend, and you want to make sure that you have that adequate value on it. A lot of people now too, common to build like a cabana or an ADU or just a separate garage or a pool house or something along those lines. A lot of times people don't pay attention to that value. It's typically a percentage of the home itself, of your main home, but you want to make sure that that is an adequate amount to replace other detached structures you have on your property. If you've done any remodels, so we just saw this recently when we sent out a newsletter about have you done solar updates to your home? But any updates to your home, just let your agent know. And again, that could be something like solar. It could be adding a pool, cabana, ADU. You want to make sure that those are listed on your policy. So again, if you have to make a claim, they're going to be adequately covered.
Mm-hmm.
You should also let your agent know if there's been any updates to your home. So the most common ones would be like replacing your roof. That can actually get you a better credit on your policy. So let your agent know about those updates. Same thing if you update your electrical, your plumbing. If you've added a generator to your house, let your agent know those things as well. And then also ask about discounts that are available. So we see like water shutoff valves are becoming more and more common. It's something that monitors effectively their leak detection programs. If you have one of those, make sure your insurance company knows that. Same thing with like central alarm systems. And then cameras don't always necessarily give a discount, but they're great because if someone is saying something, especially if you have like a pool or it's just a great way to, video is worth more than just someone that he said, she said type situation. If your property's held in a trust, super common for a lot of our customers, make sure the trust is listed on the policy. Very important to do. If you pay off your loan, a lot of our clients are doing that as well. Let the insurance company know so that, again, if you have an insurance company or a mortgage company is listed on the policy, guess who the check gets made out to? And if you're no longer working with that mortgage, if you paid it off, then let the insurance company know so you can avoid, and not that it's going to hold up or negate a claim, but it's just going to add a bit of hassle that you don't want to necessarily have to deal with. And then the biggest thing that we have is, and this is really changing people's mindset on it, is insurance is not for little losses. So if you have really anything less than $15,000, let's say you have a little minor water leak or something like that, or just some sort of small damage to your home, even if it's below or if it's above your deductible. Let's say you had that $10,000 deductible and you have a $20,000 loss. Don't turn that claim in. Save your insurance for that catastrophic type event. Because the problem is someone says, well, I've never filed a claim, so I'm going to file this one for $20K and get my $10K or $15K payout from the insurance company after that. We don't know what the future is going to hold. And if you've made that small claim, what you for sure want to make sure it doesn't happen is you have two claims in a 3-year period. And again, who knows what the next 36 months will hold after you've made that small claim. But if you have a significant claim that you would use insurance for, now all of a sudden that person has two claims on their record, and they're much more likely to get canceled by their carrier versus if that in the same scenario, if that person would have self-insured that first claim, now they would only have the one claim on their record going forward. So
Okay.
those are my home insurance tips, Peter. Any questions or feedback on any of those?
Yeah, so we've talked about, trust being a big one, and obviously, that kind of comes through, but like when it comes to like rental properties, right? So if you have a rental property, like it's because it's not uncommon to have one or two, maybe have one or two homes for some of our clients, or even have, other properties that you're sharing. But how would we handle those? And I guess like second homes, like they might sit vacant for 6 months out of the year. Like how does that work?
Yeah. So one of the suggestions we'd have is for rental properties, if you can put them in the name of an LLC, then that's beneficial to do so. Most of our carriers will allow, like you mentioned, one or two rental properties. If you get anything, I think usually the cap is about four properties. So if you have more than four rental properties, and then carriers will say, you know what, we no longer want to put those on your umbrella policy, list those on your umbrella policy. So the biggest piece would be, can you title in an LLC? If you have a bank loan on it and you're the one on the bank, like if it's a personally bank loan in your own name, then
Mhm.
it's trickier to get that in an LLC because you have to do things like a quick claim deed, and sometimes banks won't go along with that.
Sure.
But if you own the property outright or you have a commercial loan on it, then great to set it up in an LLC. And all that does is say, if something bad happens to me, let's say there's a fire and someone's injured or someone dies in that rental home and you get sued, if it's in an LLC, then that loss is contained to the LLC. So they can't come after personal assets in that situation. If it is in your name, then again, we want to make sure that the umbrella that you carry, and we'll talk a little bit more about umbrella and umbrella limits in a moment, that it's adequate for that exposure that you have, and it's scheduled on that umbrella policy.
All my other questions were umbrella related, so I guess let's dive into that.